Good morning, trade pros. Hope you guys are having a great day. It is the 10th of December, just 20 or 15 days, a little bit over 2 weeks away from Christmas. So I'm wearing my Santa hat. um, Hope you guys are having a great morning so far. We got a lot to talk about in the news cycle. A ton has happened here, but let's kick it off with saying this. This Thursday, in just 2 days, episode 4 of our podcast comes out, and then that's going to be called Towards and Away Motivation. And what Mark and I talk about is how changing your motivation around your values can help you get your goals. In life, a lot of us think about the things we do not want, and then unfortunately, the more we think about things we do not want, the more we surround ourselves with them. And so we help you reposition your values, how to have a mindset that pushes you towards what you do want. And once you kind of set that thermostat internally, you start moving towards it. And that's the exciting part. So we talk about all that in podcast episode number 4 coming out in 2 days. All right, that's at 6 a.m. on Thursday. So that's exciting news. Link is in the description if you want to watch the first 3 already that we have up on the site. Now let's talk about some news. At 8:30 in the morning, news hit that U.S. and Chinese officials are planning for a delay of December 15th tariffs. This news came out where the S&P 500 is trading around the 28. So we've got about 20 points of upside off of that news. Quite a big rally. They're debating on how much more agricultural products China is going to purchase or consume from the United States, rather. And so that's the sticking point. That's been the sticking point for this phase 1 deal, is the agricultural products. So news came out this morning that they're considering a delay of tariffs. And then a little bit, just about 2 to 3 minutes ago, there was a report saying that this is actually Chinese officials, and the U.S. didn't say this, and the U.S. hasn't yet planned a tariff delay. All right. So that's one of the upfront things. Also, the European trade chief Hogan said that he's going to present a new trade weapon this week to hit the U.S. So that's another kind of downside. It's another trade war opening up with the European Union. All right, this morning at 9 a.m. right now, at this very moment, I forgot to put on Bloomberg. Let me put it on and see what's going on. The leaders of the House committees are going to run 2 inquiries into Donald Trump's impeachment. They're scheduled for 9 a.m. Eastern time right now. The first one centers around abuse of power, and the second one, impeachment inquiry, is charges relating to obstruction of Congress. All right. They're going to need to have a Senate majority of 66%. So they'll probably be, Donald Trump will be acquitted in the Senate. So, it's more of a political move. But it's still interesting nonetheless. And they're going to present those 2 different indictments, if you will, to kind of our this morning at 9 a.m. All right. In other news, the repo rates. This repo situation is really fascinating. I'm going to do a YouTube video on this, and I'm going to do it this week. All right. So you guys are going to hear about it soon. But here's what you do need to know. The repo markets were oversubscribed, all 3 of them. The short term, the longer term overnight, all right, and the standing repo facilities, all oversubscribed, meaning this. There's a shortage of liquidity in the banks. All right. And this shortage of liquidity is set to get even worse on Monday, December 16th, as new U.S. treasuries are being circulated to investors, which drains cash reserves. All right. And in addition to this, towards the year end, there's going to be an even bigger cash crunch coming up around the year end, which could spike the borrowing costs of yields. On September 16th, repo rates went from 2% to 10% overnight. All right, because there was a shortage of liquidity, so money became more expensive. And this shortage of liquidity is believed to be happening mostly at JP Morgan and other big banks that are providing liquidity or short-term lending facilities to hedge funds to leverage their bets. So there's more information coming out of these repos, but this is what you need to know. There's a bit of liquidity crunch. The repo is one thing that the Federal Reserve has done, but more importantly, the Fed has started bond buying, or the bond purchasing program. And now we know why they don't want us to call it QE. Remember when Jerome Powell said this is not QE, but it is QE because they're buying bonds in the open market. The reason he said it's not QE is because it's designed to support the repo. It's designed to provide short-term liquidity to banks. It's not a new quantitative easing round for the long term. All right, that's what he wants us to believe. It still is quantitative easing. He just wants you to know that it's not for the reason it was before. The market's not terrible. There's just a shortage of liquidity. I'll tell you this, a shortage of liquidity could pose a lot more challenges and problems than we think to the market. All right, keep your eyes out on this one because this is something that's going on in the background that many people are missing. These oversubscribed repos are really bad news for the medium term to long term potentially of the market, especially if we can't resolve the situation on the liquidity crunch. The problem is that once something like September 16th happens where interest rates run away, it spooks investors. All right, they're saying, look, why would we lend money if we have to potentially pay 10% for overnight? And they start to pull back their money and they start to hoard the cash. They're a little bit more restrictive in the way that they lend, the big banks, which creates even less availability of cash, which creates higher rates, which creates even more need for the Federal Reserve to do repos to inject that liquidity into the marketplace. All right, so this ain't an easy situation. Keep an eye out on it. The world's biggest IPO. This is on to other news. Saudi Aramco just got bigger. They're more than likely to extend their 15% green shoe option in IPO terminology. A green shoe means that you're telling your underwriter, the bank, at Saudi Aramco, they have a lot of underwriters. They're telling all their underwriters, we want to issue more shares than we had planned by 15%. So this usually happens when there's really good demand. All right, and you want to sell more shares of your company. Again, you're giving away a bigger piece of your pie because you're giving more ownership away to the company publicly, but you also fundraise more cash because there's clearly more demand for it. That raises the potential valuation to $29.4 billion of this IPO, which is bigger than what Alibaba raised in 2014, which was $25 billion, all right, which was debuted in the New York Stock Exchange. Saudi Aramco's initial price will be published today, and it begins trading on the Saudi exchange tomorrow. All right, so this is the world's biggest IPO. The book price will be published today, and it begins trading tomorrow. Expect to see some excitement around it, some volatility. All right, U.S. and North American clients can't get a piece of it at all. You have to be local. So it's going to be very interesting to see how that IPO looks on the initial launch, if it's supported by more purchases, if it's going to continue to rally, and at what point will it have an opportunity for other markets, so to be interlisted, to be listed on multiple exchanges around the world to give it access to more capital. Very interesting stuff going on with that. We're going to expect to hear some more news on Saudi Aramco today. All right, in today's markets in Asia, Japan's flat, Hong Kong's flat, China's flat, India's down 0.6%. All right, Chinese CPI for November came out at 4.5%, beating the 4.2 expectation and way higher than the 3.8 prior report. This is actually the highest CPI reading since January of 2012. All right, and in Europe at midday, London's down 1.3, Paris is down 1%, Frankfurt down 1.7%. So European markets took the brunt of the downside overnight. Futures in the U.S. were down 0.4% across the board. S&P down and Nasdaq. Now they've rebounded and are more or less about 2.5 points above the prior day close. All right, we're getting the Democratic impeachment news conference at the moment. All right, let me just. I don't know if you guys could hear it, but it's on Bloomberg. Basically the same thing we just talked about. I summarized it for you. All right, let's look at some of the comments. I love that affirmation, Craig. I love that. Did you like them, Pele? Said awesome podcast. I guess did. Thank you, brother. Appreciate it. I also appreciate the review. If you guys like the podcast, follow Pele's lead. He was the first person to read a review or write a review. Really appreciate you, Pele, and thank you for supporting the podcast. Morning, Dimitri. I'm ready for the Santa Claus rally. Let's go. Look, it even makes a sound when you shake your head. Thanks, Will. Appreciate you, brother. It's very important for psychology. All right, guys, let's get out into the trading room. We're going to hear from Steven about the oil market. Send you guys love, joy, and happiness for today. Check out the podcast. Leave us a review and rating. We'd really appreciate it. And also, manage your risk trade like a trade pro. Today looks like there's going to be some volatility driven around trade negotiations. We've already seen some upside in equities and some downside. Be in a group today, have access to Newswire, and you'll have a chance for success. Speaking of which, we're going to go trade with our group. We love you guys. Have a great rest of your day, YouTube. Send you love, joy, and happiness, and we'll see you tomorrow. Goodbye. Manage your risk trade like a trade pro. Ho ho ho. Merry.